Okay, we are live.
Welcome to Stock Unlock Podcast, episode 44. We have Canada's #1 investing YouTuber, Daniel Pronk, and some guy named Jake, that's me, talking about stocks. We are going to be analyzing your stocks today. We will actually be taking a comment from one of our last videos. And if you're listening to the recording on Spotify or on YouTube, come hang out with us live sometimes. And if you're curious as to when we go live, get into our Discord. You can find that link in the description. Daniel, I figured that we could just hop straight into a stock from one of the last videos. I'll quickly share my screen and then pass it off to you. This user has seemed very consistent, and we really appreciate getting suggestions from the chat. So keep saying you should look into ASO, and we're going to ignore that somebody asked if we're brothers, because we are not brothers. Or we are not biological brothers as far as we are aware.
As far as I know.
We've been DNA tested.
All right. ASO? Is that what we're doing? ASO?
ASO, yeah. And for everyone in the chat, hello, Kevin, Brian, Sophie, Tad, R. If you guys want us to analyze your stocks, drop it in the chat. We are going to be interacting with you all a lot today. We're going to be live for about an hour.
Okay. ASO is Academy Sports and Outdoors, Inc. $4 billion company. Looks like it IPO'd in 2020 at about $13 a share. It is up 340% since then. That is a lot. If we scroll down, this company is an Academy Sports and Outdoors. Sorry, that's the name. Oh my goodness. Owns and operates sports goods and outdoor recreation stores. Okay, so they own and operate sports good and outdoor recreation stores. Got it. All right.
Over 22,000 employees. So this is a big company.
Yeah. So it looks like their revenue grew from 2020 to 2022 from 3.5 billion to 6.7 billion. So almost doubled revenue. But since the first quarter of 2022, revenue has actually been stagnant and even downtrending a little bit to 6.3 billion. So revenue is going down right now. If we take a look here at the cash flow, operating cash flow peaked in 2021. It's actually been coming down as well to 507 million now. Low capex though, 132 million. Looks like they used their money to buy back stock and repay debt. Not bad. And they do have free cash flow of 375 million. Okay. So lastly, let's take a look at this balance sheet. 300 million in cash, 4.6 billion in assets. Most of that is property, plant, and equipment. Okay. Current liability is 1 billion, though. Total liability is 3 billion. So their tangible book value, actually, it's clearly trending up, but it's only 241 million. So they do have a lot of debt, it looks like. But they are using the cash flow to repay debt, which is probably why the tangible book value is going up. The price to free cash flow is only 11, though, which means the free cash flow yield is 8.6%.
Yeah, I feel like that might be from the lack of growth. And is it normal for a company to pay a dividend right after IPO? I've never really thought about that too much, but they are paying a dividend and actually had raised it. It's not a huge one, but it seems like their cash flow is going to that as well.
Yeah, I don't know if I don't know how normal that is. It looks like they repurchased 10% of their shares in the past year, though. And as you said right here, their growth really isn't that great right now. The growth score on Stock Unlock is 2.13. Revenue is down 5%, gross profit down 6%, operating cash flow down 8%, free cash flow down 21%. So, it's not really growing at this point anymore. It does have a decent balance sheet, but yeah, I don't really think there's too much growth left here, which is probably why that price to free cash flow is lower. And the free cash flow yield is about 8.7% now. So I don't know, Jake, what do you think about this one?
I feel a little confused, honestly, because they IPO'd, but they're not growing. They have some debt, but they are also buying back shares and paying a dividend. So some things that I like is they're shareholder friendly enough, paying out the dividend, buying back shares. They are not diluting. They are profitable. So that's also good. However, the type of investor I am, this is where everyone's going to differ, is I like to look for growth. Also, the dividend here is not that juicy to me. It's not a really big dividend relative to other stocks I'm seeing. I guess I just like to know more about the business. I mean, there are a lot of big players in this space. You got Dick's Sporting Goods. There's a lot of other companies that I embarrassingly can't name because I never look at this industry that sell these products. So my question is, what is their moat? What is their chance of growing, and how are they managed? I'd like to look into their executive team and see if they have an edge on some of their competitors here. Obviously, we don't have the time to go through that in this stream, but for anyone that is interested in this stock, or for the person who asked this, those would be the next things I would personally look into. How about you, Daniel?
Yeah, for a business that's not really growing, I personally would want more of a yield on it. I mean, an 8% yield is okay, but if it's not growing, then like that's basically what you're going to get from that business. So, and then also the business is actually declining right now. So is that 8% free cash flow yield going to remain in the future? I have no idea. What was the other thing I was going to say here? Oh yeah, I think they IPO'd because during the COVID pandemic, at least up in Canada, everyone was going outside and camping and hiking and whatnot. So these outdoor businesses like ASO, it seems, saw a boost to the revenue. Like we saw that the revenue doubled from 2020 to 2022, which is probably why it IPO'd. I mean, the time you want to IPO is probably when your business is growing strong and also when the market is a bit frothy. So they kind of got a double whammy there. So I don't know. It makes sense to me why they IPO'd, but it's just not really that exciting to me personally.
Yeah, my hunch, and this is a complete prediction, is they might have a big online presence if they were growing during COVID. So they might have seen some tailwinds from that. And your point was good too. People were outside a lot more during COVID, and they had more, fresh powder or cash, as you'd like to say.
Yes.
Interesting. Yeah. Let us know in the chat if any of you are invested in this company. If you are the person that suggested this, hopefully you're here or you see the recording. We do see you. Daniel, maybe you want to come and find another one here. I'll take one comment in the meantime. From a Stock Unlock subscriber and Daniel Pronk follower, can you please... Oh, this is actually a suggestion. I just saw that the person mentioned Stock Unlock. Maybe that is the trick to get us to pick your question. Make it seem like you are complimenting Stock Unlock and then just like slip in the stock suggestion there.
That's how you'll trick Jake every time.
I tend to read things like all at once and miss a few words. It's definitely not dyslexia, but it might be. Anyways, what are we looking at here?
I'm trying to find Zen Game, which was the ticker, I believe.
Okay. It's HK2660.
Okay, yeah, this one then. All right, inside score immediately is looking very nice at 4.81. That is a very high inside score. Wow. Looks like it has been public since 2019-ish. Since then, it's up 100%. That's got to be beating the SPY then. Yeah, for sure. Recently, it started beating the SPY. It had like this big spike here at the beginning of the year.
Maybe a good earnings report.
This looks like it is a Chinese stock, or at least in Hong Kong, because the .HK, $3.39 billion company. It looks like 23% free cash flow yield, 6% dividend.
I just want to point out the currency there. So that is not USD.
Yep. Zen Game Technologies engages in developing and operating mobile games. The company headquartered in Guangdong, 524 full-time employees. So they develop and operate mobile games. I would want to know what mobile games they own. Overall, it looks like their business is growing, though. Let's take a look at the income statement. In the trailing 12 months, revenue is at an all-time high. Let's take a look at cash flow. Cash flow is also at an all-time high. It costs this business like nothing to operate. They have $732 million in operating cash flow, $6.3 million of capex, low debt repayments. Looks like a large portion of their cash flow goes to paying the dividend, but that's a very clean cash flow statement in my opinion. Let's take a look at their balance sheet. So right here we can see, just on this pie chart, 63% of their assets is cash. That's good. Liabilities, most of it's current liabilities. Then if we take a look at this last pie chart here, 87% is assets and then only 12% liabilities. So immediately looks like a strong balance sheet. 1.3 billion in cash. This is in the Hong Kong currency though. Liabilities, total liabilities, 285.6 million. So you can see here their cash could easily handle all of the liabilities. So there's a very strong balance sheet right here. So this is a growing business with a strong balance sheet with a 22.3% free cash flow yield. Okay, what I want to take a look at here, since there's so much cash on the balance sheet, I actually want to take a look at the enterprise value, free cash flow.
I want to throw a little fork in this too, just to get everyone thinking. If people remember Lucky Coffee or Luckin Coffee, I think it was called, that was a fraud. And if something is too good to be true, I'm just saying, please continue, but I have never seen an insight score this high. My like bullshit alarm is like kind of going off, but I have my tinfoil hat on. I have absolutely no idea. I've never looked at it.
I mean, whenever you're dealing with a Chinese stock, you really have to look into this stuff a lot more because there has historically been some fraud here. But yeah, I mean, the enterprise value to free cash flow is sitting at 2.6 right now. So when you factor in the cash position and subtract that from the market cap, it's selling for a free cash flow, price to free cash flow of 2. So, I mean, it looks, in my opinion, looks quite cheap and it's growing. But again, you know, it's like a small cap Chinese stock. So definitely some extra risk there.
Yeah, that is just so good. Every single insight was very good. And I'm trying to remember when I've ever seen that before. So I personally don't invest in companies on the Chinese exchanges. If anyone else has looked into this, I kind of want to go to their headquarters and see if their addresses are real, right? Like maybe you go there and it's an empty warehouse or something like that. So frauds do exist. Obviously, we do not know that. Let's give them the benefit of the doubt. But if these financials are real, that is absolutely incredible.
Yeah, that's pretty wild. That is definitely looking like a wild stock right there.
All right, what do we have next here?
Okay. I'm going to take a look at, oh, wait, sorry. No, this one. I'm going to take a look at new because this is a Berkshire Hathaway stock, actually. And they did just report their earnings. We've also written a newsletter on this business before. I don't know if our financials have their most recent earnings. Unfortunately, it does not look like we do because they just reported a day or so ago. But this is a high growth bank, mostly down in South America, I believe even mostly in Brazil. And this bank is just like, it's growing so freaking fast. It's ridiculous. Actually, if we take a look at their insights right here.
Yeah, you want to be sharing your screen. And I do remember, just to double highlight that, we do have a Stock Unlock newsletter. If you're not signed up for that, you can go to stockunlock.com, create an account, or on our homepage, you can sign up. And yes, this is a short-term event, so I don't think it's worth really cheering about or thinking that, you know, you're a genius. But to give credit where credit is due, I think that this stock has went up a lot since it was written about as a research candidate. Is that correct?
Yes, I believe so. I think it's almost doubled. Yeah, we wrote about it.
But you didn't buy it, though.
No, I did not. Okay. Growth score is 4.0. Revenue, as you can see, revenue has grown by 140% over the past year. Gross profits are increasing. Operating income is increasing. The net income did decline by about 11% over the past year, but the company is not really focused on getting its profits up. They're really just focused on marketing and getting this business growing, which, in my opinion, they are doing quite well. Actually, in the newsletter we wrote on this stock, I went and I looked at the net margin of mature banks. And then I applied that net margin to new holdings or Nubank. And it was something like, if the business at the time when it was down here trading for $3 a share, it was something like if the business had the same net margin on average of another bank, it was selling for a price to earnings ratio of like 20. So that's kind of why I wrote about it. But now I would want to see the most recent metrics, but it's a fast growing bank, dude. It's nuts. 100%.
They're based down in Brazil.
Yeah, and I believe in their most recent earnings report, they said every quarter they're gaining over 1 million new customers. So it's like a land grab down there, and they're just executing very well.
Yeah, I know that we are not really macro people, but I listen to a ton of investing podcasts. I listen to a ton of people who are active hedge fund managers or people who are even into micro caps. And I keep hearing a lot of same themes the more different podcasts I listen to. There seems to be a lot of value outside of U.S. markets. Now, I know that is not our area of expertise, but my bell goes off there with this stock because, like you said, Brazil, land grab, there's a lot of areas in the world, especially you look at India, where they are up and coming emerging countries. We're not going to have time to explain the whole civilization life cycle and growth boom bust, all that. But yeah, this one piques my interest. And honestly, Daniel, if I ever get the time, I would love to look at smaller cap stocks on other exchanges. It's just a book that I have not really opened yet. I'm not sure if you've done any looking there, but I am hearing a lot of murmuring about that area of investing.
Yeah. I've been hearing a lot of super investors as well saying they're looking for value outside of North America now, because North America, specifically the US, seems to be not really that cheap anymore. And emerging markets seem to be quite a bit cheaper. I don't know if that applies to India. India has historically been quite expensive, but look at China. China stocks right now, I think Alibaba is now trading for a price to free cash flow of 8, which is, and it's growing. Like, revenue is at an all-time high again. Cash flow is back up. So yeah, people are definitely looking outside of North America.
Yeah, I was gonna say, word on the street with China is it seems like they are gonna have some issues ahead of them because of declining birth rates, things like that. But honestly, I feel that the news goes back and forth, and even the same people have changed their opinion back and forth. So I just feel that is whatever the flavor of the day is for predicting the future of China.
When is the news not saying that China is going to collapse next year? Every time I read,
Dalio was super bullish on China in like end of 2021, 2022, correct?
Okay, yeah, but I don't think Ray Dalio is a good indicator of the overall sentiment. I think people were actually going against him quite a bit, saying that he was wrong.
Sure, but I think it would be a big leap to like discount things that Ray Dalio says. I totally agree with you, and I'm like down to like bash on like, you could take 5 experts to be able to disagree with each other. I totally get it. But at least for me, like when Ray Dalio speaks, I at least listen to try to understand. I've read a lot of his books too, but
Ray's
very fair though. Just like Ray, we talked about that last stream. He was like, "Oh, bam, 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 bam! I love this stock. You should love it too. It's going to be a long-term compounder." And then, boom, sold it in like a few months. We're like, "All right, man. Well, who do we choose?"
Apparently, he went and did an interview on YouTube and talked about his most recent investments, and he was basically saying that those 2 businesses, the coal businesses that he bought, it was something like he believes they are going to produce more cash flow than the existing market cap. Like, there's a very high probability that over the next few years they're going to produce more cash flow than the price that he was buying them at. And then he said he's only seen that once before in his investing lifetime, and he never thought that he would see it again. So that's what I was saying in our last stream, is if he was talking very highly about Brookfield, and then a few months later sells Brookfield and puts 80% of the portfolio into another stock, to me, that's like, he must have thought that it was such a good opportunity that he wanted just all into it, basically. And then when I listened to the YouTube video, it kind of sounded like that was his thinking. It was just like he found this amazing opportunity that he believes in, and he wanted to just go 80% in. So I don't know. We'll see how it plays out for him.
I would love to see that company repurchase like 80% of its outstanding shares.
They repurchased 22% over the last year alone.
I remember you pointing that out, and I was looking at it, and it's like, all right, I don't get the industry, but I see how friendly this company is being to shareholders. So we'll see how that plays out. I mean, Monish is one of the best investors in the world, or that's what people on the street say. So I definitely respect his moves and following his intuition, but we'll still stick with what I said last stream, where it's very hard for me to trust what he says moving forward, or at least just take what he says with a grain of salt, knowing that he's very happy to just completely go back on everything he's been saying for the past 3 months if he finds a better opportunity. And hey, fair enough. He doesn't have to answer to anyone except himself. I got respect for that.
Yeah, I agree.
All right, what do we got next here? I feel like you're better at picking them than me. I tried once this stream and somehow messed it up. So
oh my goodness.
That was an interesting one though. For people that are just joining, we looked at a Chinese company that's financials were so good. I actually posed the question if they were potentially fraudulent, which is of course putting on a tinfoil hat, but worth going back and watching that one.
Yep. I was also just going to say that Berkshire Hathaway now owns, it looks like $760 million worth of Nubank. It's almost $1 billion worth, which is almost 3% of the company. So not bad. Pretty large position.
It's a good signal.
Okay. Let's continue on. I'm just reading now. Sorry. All right. Rax is asking, let's ask both of us, where do you think the market will land by the end of the year? Jake, what do you have to say?
I really don't like that you gave me this question first. I don't know. I am an individual stock investor, so to me, like, it's just irrelevant. I appreciate the question, but I just don't think of investing this way. No one can predict where the market's going. People have been crying recession for over a year. I mean, everyone's going to predict what I'm about to say, right? Like, you cannot predict the market. People lose more money betting against the market than people make shorting it while it's crashing. I'm not sure if I'm taking the words out of your mouth here, Daniel. What is your sentiment on this question? I'm trying to give it a fair answer because I think this is like the right thing to be thinking about, but I also don't want to step out of what I feel comfortable saying. And this is just the truth from me. I mean, I have no idea. No one knows.
Yeah, I agree. I have no idea. Absolutely no idea what stocks will do by the end of the year.
I'm going to toss you a question like this. I'm going to go in the chat and look for one here.
Let's do it. I think this is an absolute coin flip, personally. Flip a coin, and that's 50-50 chance.
I mean, so there's so many one-time events that could happen, right? I don't want to. Well, okay, this is a negative example. If Russia brings out nukes with Ukraine, terrible thought, right? Maybe we have a lot more to worry about than getting our little paper money out of the stock market at that point. But there are just so many things that you cannot predict happening. COVID. Who could have predicted COVID? Maybe if you saw the signals happening after there were some breakouts and you went against what the news was saying, maybe you could have like made some money on that short, but it's just so unpredictable. There's even things on the upside that could happen too, right? Like if people are making new discoveries for superconductors or things like that, that could cause stocks in certain sectors to boom. If those stocks happen to be heavy into indexes, it will bring the indexes up with them. So let us know what you think about the answer, you guys.
It's not a fun answer. It's not an exciting answer, because it seems like the more exciting answer would be for you and I to have some sort of strong opinion on where we believe the market's going to be.
It's going to the moon, bro.
And we just have no idea, and we stick by that. So that is what it is. I'm sorry. Okay, moving on to the next question. What do you think about EQB's valuation today? So EQB is a funny one, because if we go here and we go to EQB, I believe it's lost all of its gains since it reported its earnings. Yeah, so it reported its earnings, shot up to $82, and then ran all the way up here to about $85 a share. And now it is down 10%. So it's lost all of its earnings gains. And I thought the earnings were incredible. So what do I think about the valuation today? So how I think about this, one way I look at it is I want to look at the company's price to earnings ratio versus its historical averages. I like to go over the past decade. I think that gives a long time frame on the company's volatility and how the market is valued over time. So currently, Equitable Bank's price to earnings ratio, GAAP price to earnings ratio, is 8.4. Its average over the past decade has been about 7.8. So relative to its historical averages, it is above where it has historically traded. You could argue that would mean it is selling above fair value right now, or is on the more expensive end. Now, personally, I like to take this into consideration, but I also like to just go and take a look at things, one second, as they are. So let's take a look at the company's earnings yield right now. The company still has an earnings yield of 11.12%. So if it wanted to pay out all of its earnings as a dividend, it could pay me a 12% dividend right now, which I'm very happy with. So that's how much the business itself is actually generating, is 12% for the shareholders on its price today. I really like that. And then also, this business is growing its net income over the past decade at a 15.6% compounded annual growth rate. You can see that it's at an all-time high right now. So that's basically a 12% earnings yield today for a business growing its net income by 15.6% per year. Personally, I like that. I think that's pretty good for me. So I don't mind its valuation today personally. Those are the reasons why. And I'm holding on to my shares. I believe in my video that I made on EQB, I said I'm not looking to buy more shares right now because it is a pretty big position of mine. So yeah, I'm not looking to buy more shares, but I'm just holding on to it.
Mr. Banks.
Mr. Bank. Yep.
I did post a link. Daniel did talk about EQB's earnings in Stock Talk episode 42. Unfortunately, it looks like YouTube broke my comment into two. However, both on Spotify and on this YouTube channel, you can check out episode 42, and we do have the timestamps in the comments and also on Spotify chaptered out. So if you want to bookmark that for after the stream, I suggest go checking it out.
Sweet. Okay, we got two comments about BEPC. This one is Brookfield Renewables.
Oh, I recognize this person. I have been working with you, I believe, on customer support, dare I say, for brokerage portfolio connection, if my memory serves me correctly. So it is great to see you in the stream. Hello, that is a beautiful butterfly image. Anyways, get us back on track here, Daniel. I'm definitely the derailer of the two of us.
Yes, you definitely are.
The huge red ball on the stream.
We're going to take a look at BEP here. So this company now pays a 5.1% dividend. It IPO'd in, where did it IPO actually? It's been around for a long time.
You want to be screen sharing right now?
Am I not screen sharing?
Nah, dude. 2 times today. I got you. What would you be doing if it was just you? We'd be a screen sharing-less Daniel over here.
I don't know. Sorry, I thought I was screen sharing again. Okay.
We do these live, so it is expected.
Okay, this stock is up 466% over the past 23 years. I believe that beats the SPY. Should be beating the SPY. Yes. I don't think the company always outperforms, though. So yes, depending on where you purchase it. For example, right here, anyone who bought in 2012, BEP has not outperformed the S&P 500. So it kind of depends where it's been purchased. But currently, it does have a 5.17% dividend. Let's take a look at its insights quick. So the dividend per share does grow historically. Well, over the past year, it's grown by 5.47%. Over the past 5 years, it's grown at 1% per year. Operating cash flow payout ratio is 20. Its growth. So full disclosure, I used to own BEPC, Brookfield Renewables. I since traded it. I do not own it anymore. And the reason for me was I wasn't really impressed with this company's growth. So here you can see the growth score is like 3.3%. Revenue's grown by 5.6%. EBITDA 5.6%. It's growing. It's just not really incredible, in my opinion. And the dividend, when I sold it, the dividend is higher now because the share price came down. But when I sold BEP, I believe it was somewhere, I don't know the exact date, but I think it was somewhere up here. And when I sold it, the dividend yield was around 4%, if not below 4%. So it was basically a 4% dividend yield on this kind of company, a utilities company, isn't that high. And the dividend wasn't growing that fast. Now, if you go and take a look at BAM, I did the same thing with BIP, just letting everyone know. When BAM IPO'd, and it fell down here to $27 a share, its dividend yield, I believe, was 4.5%. So the dividend yield was higher than the BEP shares. I believe it was also higher than BIP shares. And BAM is projected to grow its dividend by 15% per year. So what I saw was a higher dividend yield and faster dividend growth. And this business also has a much cleaner balance sheet and is, in my opinion, let me reword that. In my opinion, it's a lot easier to understand. So I felt like I understand this business better, had a higher dividend, and the dividend was projected to grow faster. So when this thing became public, I saw, for me personally, I didn't really see a reason to own BEP or BIP because this seemed like the better dividend stock. So that's what it came down to. That's why I got rid of BEP and BIP. I no longer own those. I only own BAM and BN. So those are the two I own.
Seems like the market agrees too, looking at those stock prices.
Yeah, when BAM became public, I remember I made a video and I was like, I'm buying as much of this as I possibly can right now. And
not financial advice, by the way.
Not financial advice.
Do your own research.
Please do your own research. But yeah, just let everyone know what I was doing. And it became a pretty large position.
Yeah, the one thing that was interesting for me watching you go through that, I was starting to think, oh, this dividend looks well covered. 4% is like not bad. But then you made a comment, you're like, it's not actually great when you're looking at it within the utility sector. So I just thought that was a really good takeaway for me personally. This is coming from someone who doesn't invest in utilities anyway. So yep. I'm just taking notes, but not super interested. For those of you who are, though, make sure that when you're looking at dividend yields, that you're comparing companies within the same industry, which could give you a better signal as to like what the averages are there.
Yeah, like for example, Capital Power, which is another dividend stock we talk about on the stream once in a while. That one's dividend yield now, I believe, is like 6.4%. So, and that's a renewable energy. Well, they're like half renewable energy, but so they got quite a nice dividend there. And they're projecting to grow the dividend at 7% per year. So again, you got a much higher dividend and more dividend growth. So it got to a point where I just thought that there was better opportunities than BEP in the market.
Fair enough. It looks like we have a few new streamers here. We do this every week. So if you are liking what you're seeing, throw us a subscribe, throw us a thumbs up if you are liking this. We are two huge stock nerds, and Daniel Pronk is Canada's #1 Canadian investing YouTuber. I will make him red in the face saying that, but it is well deserved. You do not take enough credit where it's due, in my opinion. But yes, we are taking live suggestions in the chat. We are analyzing your stocks, and we are doing so with Stock Unlock, which is the investing software company that we have both founded and are scaling.
Okay, so I'll talk about this one really quick because it came in and we are on the subject of Brookfield right now. So, whoa, that was not the right stock.
Is that a 10,000th of a penny that we just saw there? Yeah, I didn't even realize that the ticker could go that low.
Yeah. Okay, so this is Brookfield's insurance business. I've tried to understand what's going on here, but from what I've read, Brookfield Corporation, BN, owns 100% of this business. So I don't really know if there's a point or a benefit, from my understanding, for me to own BNRE when I own BN. Because BN owns, again, the entire insurance business. So I didn't get it. I spent like 30 minutes looking at the SEC filings, and I was just like, I'm just going to hold BN.
So are you saying they own 100%? I mean, they're like a major owner? Because if it's public,
from my understanding, yeah, that's what I mean. I don't understand how it works, because from my understanding, Brookfield Corporation owns 100% of Brookfield Insurance. Then my question is, well, then how does it trade? How can I buy shares of it? Like, how does that even work? So I didn't understand it, and I'm just fine owning BN.
I mean, I guess we're getting into territory that we probably shouldn't be talking about without more research, but I would imagine that they were a majority shareholder or something. But yeah, if anyone knows in the chat, let us know.
Okay. Is there any comments you want to talk about, Jake?
There's a lot of new stock ones. There's a couple ones where I agreed with, where I thought was an interesting question. Someone asked about the difference between two share types of BEPC and BEP, I think, but now I can't find it.
Okay. PayPal's been a stock that everyone's talking about recently. What do you think about PayPal?
We've talked about this stock before, right?
I know, but they just reported earnings and now they're continuing to drop.
So what's really funny is no one knows this actually. I don't really trade stocks, so this is very unlike me. I actually owned 2 shares of PayPal for about a week because I was looking into them. This was about a year ago, by the way. This is a full year ago. And I hated it. I owned the shares, and I was like, this just feels terrible. Like, I started looking to the stock more. We also started using PayPal as a customer at Stock Unlock, and I was like, I'm having the worst experience of my life right now dealing with this company. And I said, you know what? Like, I am trusting my gut. By the way, what I do when I want to own any business is I'll buy 1 or 2 shares of the company, not touch it for a week or two, and just see how I feel. Because that is a really good signal. If you're not sleeping well owning a stock, you should probably not be touching it. My question with PayPal that not enough people are talking about is Fed now in the United States is rolling out as we speak, which major banks as an opt-in, basically what PayPal and all these other companies provide, like Venmo. What people need to understand is the United States is very behind with payment transfers. And what Venmo and PayPal and all these companies have done is given a facade over real-time transfers where you're not literally real-time transferring your money. They are pooling money together and writing a lot of software over it where they have money pools, funds, and they're able to give you instant liquidity from their balance sheet and just continuously balance their books and make sure that the numbers are right in your accounts. So what Fed now is doing is at a federal level through the United States banks, federal banks, rolling out this system that is providing what these moats have been for these companies. So my question is, and I understand PayPal owns Braintree, like I get they have other assets, right? But like their bread and butter is the payment processing. I have not found any YouTuber that I've watched or anyone that's been able to explain to me in a way that I agree with the moat this company has for future growth. And in my opinion, a large reason for this sell-off, especially with institutional investors, is seeing that coming. So people can call me out on that. They think I'm wrong. But I am not a fan of their business model. Now, is their stock cheap right now? I don't know. But I like to buy growing businesses that have huge moats, that are run by founders that have a very long-term vision for the company. And I don't get any of those signals from PayPal.
Fair enough.
Yeah, I feel angsty about this one. I didn't realize until I was done with that. I was like, I feel emotional right now. Like getting it out. You know how to trigger me, Daniel.
You have some energy you needed to release there, it sounds like. But I would definitely agree with you that the US is behind on your payment system. Up here in Canada, I can just e-transfer people. Like I can literally just go to my bank and be like, I want to send this person money via email at no cost. And then they get their money. You can even set up auto deposit where as soon as I send the money, it's in their bank account. There's no PayPal, no nothing to send money here. I think the US should do that one day. And if they do, what does that mean for PayPal? I have no idea. Another thing.
They're doing that right now. That's what I'm saying.
Yeah.
That is right now.
And I think that's great. And then the other thing I don't like about PayPal is their users, from my understanding, have been topping out or even slightly declining over the past, I want to say, year or so. I'm going off memory. I could be wrong there. But their user base essentially has topped. And then the question for me is, okay, well, how much revenue can they suck out of every single user then? Because if their user base isn't growing, then how you grow is by sucking more and more revenue or cash out of your users. And then how long can that go? There's definitely a limit to how much revenue you can get per user before that stops, or you accelerate the amount of people leaving your platform because they're getting upset with fees. So then when does that happen? I don't know. But I don't like that business model. So I'm just...
All right. Well, PayPal's down the ring. We might as well give them a KO punch right here. I noticed, Daniel, we are on episode 44 right now. So we've been doing this for about a year. A lot of the stocks that we have been asked to analyze in the past year are payment processing companies. So I think a lot of the reason why they're losing their customers, their moat's been getting attacked from all sides, not even from the government note I just had. Is something going on outside your window right now?
Can you hear that?
Yeah.
Can you hear the beeping?
Yeah.
Okay. I'm going to close my window.
Continue. What is going on up there in Canada? You can transfer money quickly, but you have weird beeping noises coming from the window. I'm going to stay down here in New York, but
yeah. PayPal discussion quick, because this is a stock that I have been asked a lot about. So I was taking a look at their financials here. In their most recent quarter, if we take a look at their operating cash flow, it was negative. I believe this has to do with some sort of lending business that they're growing. The company did project that they are going to do about $5 billion in free cash flow this year, though, which, by the way, means that their free cash flow has not grown in 3 years now. So I'm going to just use their projections for this year of $5 billion in free cash flow. So they got a $65 billion market cap, $5 billion in free cash flow. Would be a price to free cash flow of 13. If we divide 100 by 13, that means it has a free cash flow yield of about 7.7% now. To me, that's just not that exciting. And what the company said that they're going to do is start buying back a lot of their shares with their free cash flow. But the thing is also is they have quite a bit of stock-based compensation here. So we can see their operations produced about $4 billion in cash flow over the past year. Oops. They also had stock-based compensation of about 1.2 billion. So a large portion of the buybacks, 1.2 billion of these buybacks that they're doing here, is going to just offsetting the stock-based compensation. So if we go to our insights here, and we go to, where is it? Right here. Their shares have decreased by 3.8% over the past year, despite the company having a 5 to 7% free cash flow yield. And the reason is because, again, a large portion of their free cash flow is going to just offsetting the dilution from stock-based compensation. And if you scroll down, our management score is 2.3, and the stock-based compensation as a percent of operating cash flow and free cash flow is very high. So you can see here 36% of the free cash flow just goes to offsetting stock-based compensation, And then once that's offset, then the buybacks actually become valuable for shareholders. So that's definitely something to think about.
Yeah. Two things to add here. I just looked at their balance sheet, Daniel, and I saw over $10 billion of long-term debt, and their cash position was under $10 billion. Now, I have not looked at those debt maturities. I don't know what their interest payments are on them. They can probably handle it. But it is important to note that this company does have debt. So while they are, whether it's a dividend or buying back shares, whatever it is, they are also servicing debt. I like to invest in companies. Well, actually, let me take that back. For growth companies or companies that I want a lot of share appreciation in, I like to see a low amount of debt or at least cash flows growing so that they can continue to service that. That, of course, is not always the case with the REITs. Some people might be saying, hey, Jake, you looked at NSA's debt all of last stream. I get it. That is a pretty unique security. Anyways, I feel like we have beaten this one with a stick. You can probably tell, not financial advice. We are not huge fans of PayPal's business model, but we know that other YouTubers feel differently, and we really respect others' opinions here. So let us know what you think in the chat on that one.
Yeah, definitely listen to everyone's opinion. That's just ours.
We might be wrong.
Exactly. I've been wrong before, as a lot of people know. So
are you trying to say you're a human that makes mistakes?
Goldman says TOI has been on fire. Yes, they reported their earnings to Pickus not too long ago, and I thought the earnings were great. The company is doing very well, so I'm happy with that one. I do think it is a little bit more on the expensive end right now, though, but is what it is. Yeah, I do own that stock, by the way.
Got in look a little bit interesting too. Not sure if you want to pick one out of the bunch.
Okay, let me just take a look here.
And for people following along, we're probably going to be live for another 10-ish or so minutes here. Daniel and I have been incredibly busy this week. We are actually working on hiring for a couple positions, dare I say, one full-time, one part-time. And there are no shortage of things to do here at Stock Unlock. If you're not already on, we highly suggest you check out our platform. That's what we are using for all the stock research here today on this stream.
Oh man, there's a lot of stocks here.
Yeah, it looks like you're lost in the sauce in those comments right now, like in a good way.
I want to take a look at SE.
SE. Uber is also a fun one because several years ago, Uber looked like, well, they were actually burning a ton of cash. And the huge question mark with them is, will they ever start producing positive free cash flow? There's been some little signals that they're starting to turn the tides there. I'm not willing to say I'm super excited about it yet, but that is a company that I use, all my friends use, and it is very interesting to see them kind of navigate being potentially one of the few businesses that was able to burn an immense amount of cash and stay in business for a land grab. Anyways, what's this one we're looking at here? I'm not familiar with SE.
This one is C Limited. I actually cannot explain to you off the top of my head what all of their business segments are. I've just seen this one on Twitter a lot recently. So from 2017 to 2021, it went up 2,300%. So 23x in, 4 years. Now it looks like the stock is down something close to 80 to 90%. It might actually be 90% if we zoom in here.
Wow.
Yeah,
that is a mountain.
Yeah, 88.9%. So what does the company do? Internet and mobile platform company, online gaming services, digital entertainment, e-commerce, and digital financial services. I was actually reading an analysis on this business today, and I believe the bears are saying that the company basically did not invest its capital wisely and kind of lost its moat. So let's take a look. The revenue, well, let's take a look at the insights actually. What do they say? Current ratio is average. Shares have increased by 7% over the past year. Revenue has been growing, gross profit growing, cash flow has apparently been growing. Profitability is not the best though.
Whenever I see this, all I think is growth trap. Their revenue at 10x just going up and up and up. And then you look at their profitability and it's like, yeah, Chad, but they're not making any money. So that you kind of got to do that when you're a business, or else the cash is either coming from the shareholders or debt, like we like to say.
Yep. Yeah. So I actually would want to take a look at their most recent earnings report and see if their cash flow is coming back up, because based on these numbers right here, which are not including the most recent earnings report, I mean, the metrics still are quite high. 84 price to free cash flow, 1% free cash flow yield. So I wonder if they're going to be getting this cash flow back up. That's what I would look for. So I guess I can't really give a good opinion on this one right now. Let's do Uber since you brought it up. I'm not looking.
Uber is also fun to compare to Lyft because Lyft has been a complete, absolute dumpster fire. I actually have a friend who's a senior principal software engineer at Lyft that has moved around companies, and I hear a lot of complaints from this person. Things I probably can't share because it might be insider stuff, but I don't hear anything good. I guess I can say that.
They've done $2 billion now in operating cash flow over the past year. Their stock-based compensation is almost all of that, though, which is great. Their stock-based compensation is actually higher than their free cash flow, I believe. Yep. So I don't love that.
Why?
Their financial health is not amazing. Shares are growing. Debt to EBITDA is very high. Negative tangible book value. Lots of intangibles. Profitability is still very low. Net margin's negative. Free cash flow margin 5%. They're growing though. Revenue's growing. So that's okay. Management score is 1.56. Stock-based compensation as a percent of revenue is bad at 5%. 100% of free cash flow, not good. ROIC.
A quick pause here though. I think the thing that people are really murmuring about is that they flipped their free cash flow positive. But to simplify this, you're saying like everything else looks like trash or what?
I mean, in my opinion, if you want to put it plainly, yes. I mean, cool. You got $1.98 billion of free cash flow now. That's good. But then all of that is basically being taken away by stock-based compensation and the shares outstanding growing. So I don't love this. I think that's too high, personally. And then what is their market cap now, actually? 91 billion. So even now, they're still trading at a 50 price to free cash flow. So I think, I mean, it's nice to see their cash flow is flipped, but in my opinion, like they have a lot of work to do still. I would want to see this still going much higher. And I would want to see their stock-based compensation decline massively. So it's not selling me yet, Jake.
I have to agree. But to give credit where credit is due, many people said that this company would never, ever become profitable. I think it is actually a debate whether or not stock-based compensation should be completely subtracted. But I think that's a debate for another time. So, yeah, they've got a lot of work to do. The things going for them is huge global brand. They've expanded into food delivery. My whole thing with this is they are in like small margin businesses. So sure, they are a leader and someone has to do it. But this is a weird comparison to make. Like if you look at like a Walmart or the like huge giants that end up making money, if you look at a lot of the margins of those businesses, they are razor thin. They're basically selling everything almost at cost and gaining as much market share as they can by having like low prices. But then to do that, you need to execute very flawlessly and outdo all of your competitors. Maybe Uber is doing that here, right? Like I think that there is a play on that 5 or 10 years out, but I do have to agree with you, Daniel. The valuation is insane. I do not feel good about this business at 90 billion. It seems like you do not either. So not financial advice, but it seems like this is in the PayPal bucket of womp womp. Not a fan.
Grape Jelly asks us to take a look at TPL. They say, I'll ask for TPL again next week. Don't worry. I never stop.
What if we do it this week, Grape Jelly? Will you ask for it again next week too? I mean, that is some great consistency right there. Or should I say grape consistency? Is that when I leave? Or just
stop
pushed out?
Okay, let's do it. Let's take a look. So what is this? This is Texas Pacific Land Corp, $14.3 billion valuation in the energy industry. I imagine it's an oil and gas company in some form. Since 2013, this stock is up 3,400%. So it's massively outperforming the S&P 500. Free cash flow yield of only 3% though, right now. Whoa. Okay. Operates as a landowner in the state of Texas. The company is headquartered in Dallas. 99 full-time employees. That's it for a $14 billion company?
Wow.
The segments include land and resource management and water service operations. Okay, the land and resource management segment encompasses the business of managing approximately 874,000 surface acres of land and its oil and gas royalty interests in West Texas. Okay, so they sound like they're just a very, very large landowner that gets revenue from their land and probably other companies extracting things from their land. Let me know if that's wrong. That's kind of what I'm getting right there. So with 99 employees, this is actually kind of what I was expecting to see. Because think about it, $14 billion company, 99 employees, your costs should be pretty dang low. And we can kind of see that here. The green bar is the revenue, and then the other bars are the company's expenses. And the expenses are not high. The revenue is very high relative to expenses.
Great gross margin.
Yeah, so it's exactly very, very good margins on this business. Let's take a look at the balance sheet. 60% of the assets are cash, $609 million of cash. Liabilities are $113.78 million. So again, you can see the cash could wipe out all of the liabilities if the company wanted to, and it could be totally debt-free. So very strong balance sheet. If we take a look at cash flow has kind of been coming down recently. Let's take a look at trailing 12 months. It is in the trailing 12 months at an all-time high, though, ish of $450 million. It's been growing ridiculously well. Look at that. From $7 million in operating cash flow to $450 million. Okay. Their capital expenditures are low. They buy back shares. They pay a dividend. Their stock-based compensation is also low. Is there high insider ownership? Horizon Kinetics owns 19%. That sounds like a business. Insiders?
I love
One
it.
insider owns $100 million worth. Not bad. Okay. Financial health, you can see very good, debt-free. Current ratio 16. Buying back shares. More cash than liabilities. Growth is okay. Management is very good. Low stock-based compensation metrics. Good ROIC. Profitability is a perfect 5. 96% gross margin. 63% free cash flow margin.
Wow.
Yeah, that's a ridiculously profitable business.
That's ridiculous. I'm going to add some color from Grape Jelly here, who requested this stock. It looks like they're adding some tidbits of information for us here.
Yes, please do.
They earn off royalties from gas oil companies pumping on their land. It is energy-based, so it will sway. But when fracking became a thing, it exploded due to all that oil being available under their land. So
that makes a lot of sense. So then, well, one, I don't love its price. I don't think that it's cheap, in my opinion. That free cash flow yield is very low. Price to free cash flow is 35, so that's pretty high. And then I would want to understand more. If this company is getting the majority of its revenue from fracking, I would want to know, okay, well, what does that look like in the future? I don't know anything about the fracking business. I do know that I've heard a lot of negative things about it and people being upset about it. So I would want to know more about that.
Fair enough. And I think that we are getting more towards the end of this stream. So one thing I think would be fun to do here, if you have been requesting a stock and we have not gotten to it, we do apologize. It is impossible to get to all of them. However, if you leave a comment on this video after it's posted, you might just get lucky and we might start with your stock next stream or cover it in the next stream. We will try to pick one. Someone asks here, have you done a Google analysis? If you're not aware, Daniel Pronk here has his own YouTube channel. I will say it again, #1 investor YouTuber in Canada. Daniel, I think that I can have our little special announcement here since there's very exciting things going on at Stock Unlock. I will leave it up to you if you would like to queue up another stock or wind us down here. I do know you have date night, which is exciting. You look very cute, by the way. That is an adorable shirt. You do look way better than me. Looks like I came out of the dumpster and you got a fresh haircut. You got a collared shirt on. Come on, man.
Yeah, no, go for it.
All right. I'm just slowly sharing my screen here.
All right.
So yeah, if you're new here, I think there's a lot of repeat viewers. So I'll say this quick. We are the two co-founders of Stock Unlock. We sell investment software. It's completely free to try. Go to stockunlock.com. And if you are already there, you're awesome. I know that we've got a lot of subscribers here. We just passed the 2,500 mark, which is so so amazing. Daniel and I are incredibly grateful for everyone giving us support. And with this success, we are hiring. So this is our official job posting. We did announce this lightly last stream. So I'll say this quick because you can get all the information from this link. I will share it soon. We are looking for a remote founding engineer. What does that mean? You will be working alongside me and Daniel. I am an engineer as well, so you would not be coding alone. And we are a full stack web app. So you would be coding the front end React.js, back end, which is an AWS serverless setup. I won't go deeper than that since I don't think we have a huge engineering audience here. However, shout out to Samuel in the chat. I see you. I know that you are an engineer. Anyways, reach out to us. Reach out to me. Come into our Discord. I'm going to drop this link and my email in the chat. And we are looking for the right person to come and really help continue build this company with us. I believe it is an incredible opportunity. I can usually speak better when I'm not this excited. And it's a very unique one as well. I think we're looking for a needle in the haystack here. So if you are a mission-driven person who wants to work with us on a very small team that we are going to be scaling even more in 2024, hit us up. We would love to speak with you. I am already setting up a lot of interviews, Daniel. We actually have already had 30 job applications. I put a few people in the pipeline. And I am learning, quite frankly, how much time it takes to go through all these job applications. I'm a little underwater, which is a comfortable place for us. And apparently, we always feel that way, but it is for good reason. So I'm also dropping my email here. Please, serious inquiries only. If you have a friend that you think might be a good fit for this role, let us know. And thank you, Rax. We appreciate that. We would not be here if it was not for all of your support. We obviously work very hard and passionately over here. This has been 2 years in the making. And we have a lot of incredible announcements coming up with very big name partners that you have definitely heard of. My tongue is still bit, but stay tuned. Exciting things coming for Stock Unlock for 2023 and beyond. For those of you who want to invest in us, and this is my last comment, I'm starting to filibuster here. Daniel and I are looking into options for this. Quite frankly, we just don't need the capital. And there are so many things we're worried about and handling right now, just keeping everything afloat because we cannot meet the demand of all of our consumers right now. Again, a good thing, but we have 100 things to do with the resources to do 10 of them. So we hear you. We are incredibly grateful for that inquiry and the fact that anyone is even considering investing in us. We understand that there's a lot more due diligence and information you would need. We are really going to be looking to see what we can do there in 2024. This is a lot of new uncharted territory for both of us. So we are navigating it and learning as we go as well. I'm finally done.
I think that was everything.
Everything and more.
Kevin O'Brien says, would you want the new hire to be able to participate in live streams? I don't think that's necessary, but I mean, I'm also down for it if they would like to. The more people on here, the better. I guess to an extent, you wouldn't want like 10 people on here, but I'm down for it.
It's like the company grows and it's eventually just like the worst stream ever because it's like 20 people. Yeah, we are looking for passionate investors. Ideally, this person is a Stock Unlock subscriber, someone who's very passionate about our mission here. Did you just spill water all over yourself?
Me in
the face. we have fun too. You know, like we get serious, we work, but we find the work-life balance to the best of our abilities and like to think that we have a lot of fun here. And sometimes Daniel makes a fool of himself. I stutter when I speak sometimes. Daniel's spilling water all over the place. If you have
that was a good splash, man.
Do you feel refreshed now or are you like falling asleep? What's going on?
I feel like I just had a shot of coffee. Yeah, feel good. That was wild.
Oh gosh, this might be a good time to end. There is so much love in the chat here. Thank you so much. I want to apply, but I'm still in high school. Please keep in touch. We're growing the team. Yeah, I'll be honest. It's probably a stretch for you to join our company today. However, the door will remain open as we continue to scale. You will obviously get older and older and get more experience as you go on, and Stock Unlock will be here. So keep us in mind. Samuel Batista says, haha, epic. We agree.
Jake, we have a question. Guys, you're going to explain the new features for the site. Do we have new ones?
I need to apologize, actually. In the last stream, I very optimistically announced that we were going to drop a new price feature. I have been really trying my best to get that out. It is so close, but it's really on the bubble right now if I'm going to be able to release that. What I can say is there's new stockbroker integrations coming. E-Trade is very close to being done. Quest Trade is also pretty close. fingers crossed there. Questrade's a unique one because they have to approve us for API keys. We're being told that we're close, but it's not official yet. So cross your fingers, say a good, prayer mantra, whatever works for you for that one.
You know what? If you are an investor with Questrade, like if you use their platform, you should send them an email saying, "Can you guys speed this up?" Can you imagine?
Well, you said it. We'll see if that was a good idea. We'll see if that one backfires. All right.
Reminds me of Jake knocking his coffee over on stream. Yeah, that was epic too.
Totally
that was a good one.
About that was terrifying. You literally see me flip the laptop over and everything. It ended up being okay.
You know,
good memory there.
Maybe for our 50-second stream, there'll be a full year of streaming. It should be ish. Maybe we should do like a recap of all of our best moments of me spraying myself with water, you dropping your coffee, just all the bloopers.
I'm scrolling down now because we've missed a couple of streams. So I'm wondering if we actually have been going for a year. Okay. Stock Talk episode number 1, which is also when we go over the founding story of this company, which is really fun, to be honest. It doesn't even have 1,000 views. It is the lowest viewed stream. Maybe because people like talking about stocks instead of hearing about our story. Totally respect that. But that is 11 months ago. I think we're coming up on a year, Daniel, because we missed a few. You were also doing these from Asia when you were on a 3-month backpacking trip. So we've been hustling out here. 1 year strong. I mean, it feels great. These are incredibly fun. And it's so nice to have so many people live in the chat with us. We get thousands of views now on YouTube. We're getting close to 100 followers on Spotify, still a smaller medium for us. But one of our viewers got frustrated enough with us not making a Spotify show that they stepped up to the plate and helped out, which is incredible. So shout out to you.
Interactive Brokers, what's the deal with them?
Oh, great question. So Interactive Brokers is the only other broker along with Questrade where we need to apply for our own API keys. We are in the middle of their compliance review. That one's a little more shaky. I'm pretty confident we'll get them, but I can't promise it to you. Since we sell in 45 plus different countries, they have their entire legal team assessing us in every single country that we do business with, apparently. And they told me up front that the process is going to take a little longer than normal. So maybe September, October-ish. We know there's a lot of people waiting for that one, and we're working incredibly hard to get them to you guys.
Yeah, it's unfortunate.
Partners are slow.
That's one of the largest international brokerages, at least anecdotally what I've seen. So that's going to be a big one to get. Ryan Heedley says, Daniel did quarterly updates on a park bench in Asia. We did what we had to do. The grind doesn't stop. The 13, 14-hour time difference was also great. So we made it work, though. And CW says, what happened to Daniel's Intelligent Investor Weekly videos? I mean, unfortunately, those videos did not get a lot of views. And it just kind of seemed like at the time that I was making them, they were a lot of work. Those are not easy videos to make. They take a ton of research, a ton of planning. And then the outcome of all of that work was consistently they would be the worst performing videos on my channel. So it was the most effort to make for the littlest return. So it got to a point where the time investment was hard to justify, but I would love to make those videos again in the future. Maybe I will. I hope I do. But yeah, that's the reasoning.
I'd say in general too, I mean, the mindset applies to you as well as Stock and Lock is we will try as many things as we can, knowing not everything works. I think it's the same for your channel. So really good reasoning there, though. Watch the metrics. Awesome. Anything else there, Daniel?
Nope.
Well, this has been an incredible episode number 44. For all the people tuning in live, if you have not yet, please leave us a thumbs up. It really helps us out. Or if you didn't like the show, tell us in a comment, respectfully. We really do want to hear constructive criticism as well. If you're listening on Spotify, come check us out live on YouTube sometime. We want to meet you. Have a great rest of the week, everyone. This is an off weekend weekday stream. And we're sending Daniel off for date night as well. So have a great date.
Yep, should be great. And thank you everyone for tuning in. We got up to almost 100 viewers, which is incredible for the middle of the week, especially kind of during work hours. I don't even know how that makes sense, but thank everyone for maybe skipping some work if that's what you did. And yeah, we'll see you next week.
Get back to work.
All right, bye.